In the July 12th report, USDA projects 2016-17 U.S. cotton production to be 15.8 million bales, which is 1 million bales more than last month. The estimate was based on higher planted area indicated in USDA's June 30th acres report, combined with more favorable assumptions regarding abandonment and yield. U.S. mill use is projected at 3.6 million bales for 2016-17, unchanged from last month, while exports are projected at 11.5 million bales, 1 million bales more due to the larger U.S. supply and an expectation of continued tight foreign stocks. With beginning stocks of 3.9 million bales, this would result in U.S. ending stocks of 4.6 million bales on July 31, 2017, and a stocks-to-use ratio of about 30%. For the 2015-16 marketing year, U.S. production of 12.89 million bales was unchanged from last month. Exports were raised 200,000 bales to 9.2 million bales, while U.S. mill use was unchanged at 3.5 million bales. A combination of slightly lower production and significantly higher consumption has reduced this month's global cotton stock forecast for both 2015-16 and 2016-17. USDA lowered the estimate for 2016-17 world production by 620,000 bales to 102.5 million bales. Although the U.S. and Australian crops are expected to be larger, reductions are anticipated for Pakistan, India, Greece, and Uzbekistan. The 2016-17 estimate for world mill use was increased to 111.6 million bales, 1 million bales more than last month, mostly due to higher expected consumption in China. The estimates for Chinese consumption were increased by 1.5 million bales for both 2015-16 and 2016-17. Recent strong demand for the Chinese reserve sales indicates that mills are consuming more cotton than previously estimated. Reductions in consumption were included for India, Pakistan, and Vietnam, which are the three largest exporters of cotton yarn to China. The reduction is likely due to a drop in Chinese cotton prices in 2016. As prices drop, Chinese mills become more competitive, reducing the incentive to import cotton yarn. Global trade was increased for 2016-17 by 1 million bales. Higher imports are expected for Pakistan, India, Brazil, and Turkey. Higher exports are projected for the U.S., India, and Australia. With beginning stocks at 100.3 million bales, this would result in world stocks of 91.3 million bales on July 31, 2017, and a stocks-to-use ratio of 82%. For the 2015-16 marketing year, world production was estimated to be 97.9 million bales, 230,000 bales less than in the June report. World mill use was raised 1.4 million to 110.2 million bales due to the sharp increase in 2015-16 China consumption. Consequently, world ending stocks are estimated to be 100.3 million bales with a stocks-to-use ratio of 91%. Across the cotton belt, producers are experiencing fairly good growing conditions. According to the latest crop progress report, by July 10th, squaring was at 57%, which is the same as this time last year and about 5% below the 5-year average. Boll set was at 19%, which is expected at this time of year. The health of the crop declined slightly this past week, with 54% rated good to excellent, 35% fair, and 11% poor to very poor. The latest crop progress report will be released on July 18th. Following the release of USDA's July 12th supply and demand report, cotton prices strengthened and have continued to gain momentum over the past week. Although U.S. production was increased for 2016-17, the report also indicated an increase in U.S. exports for 2016, lower production for India and Pakistan, as well as a significant increase in Chinese consumption. The rally in cotton prices has been supported by heavy speculative buying as well as current cotton fundamentals. The tightening of supply available to meet near-term demand has continued to support prices. Mills have been busy trying to fill immediate needs and have been willing to pay higher asking prices. This tightening has occurred in both India and China, where prices have increased in recent weeks. India has had to import more cotton after exporting a significant amount to Pakistan earlier this year due to a large decline in Pakistan's production. In China, the price increase is mostly due to accessibility. Reserve sales continue, but the amount of cotton offered for sale started decreasing this last month, possibly as a result of quality issues. Reports indicate that some of the cotton processed for reclassification has not met the quality requirements.